Welcome to IITW.com. Friends, in this stock market analysis video series, you are going to learn our advanced course. Our advanced course is based on neo-wave theory and DPB, the contrary trading system. In this course, you will go through 6 different units. Unit 1. Basic Technical Discussion. This unit is divided in 4 chapters, with some basic discussion of technical analysis, Elliott wave theory and neo-wave theory. Unit 2. Basics of neo-wave. This unit also divided in 4 chapters discussing basics of neo-wave theory. Unit 3. Advancing in neo-wave. Advancing in neo-wave unit is a central part of neo-wave theory, which covers logical rules involved in process of induction and deduction. Neo-wave's new emerged patterns. New emerged patterns unit is divided in 4 chapters, discussing all about new emerged patterns. Unit 5. Trading with neo-wave. As name suggests, this unit solves trading-related difficulties with neo-wave theory. This unit have focused on understanding trading psychology, risk management and trading with all types of patterns. Unit 6. DPB Detached Potential Bar, the contrary trading. This is a special supplementary unit added in this course. The DPB provides you a trade with small risk and big reward. An important feature of this research is that the DPB enlightening you with the idea that when particular neo-wave pattern will end, before first and second stage of neo-wave confirmation of patterns. Unit 1. Chapter 1. Before beginning. Chapter 1. Before beginning. In this chapter we will go through following topics. Importance of knowing whole system. Why analysis? Stages of analysis. 2 approach of analysis. Why price moves. Supply and demand. Trends. After watching our last video series of conventional technical analysis, it would be clear that trading or investing having 4 core elements, that is, trading or entry setups, analysis, risk management, and most important, psychology. Friends, this is quite unfortunate that most of trader and investor don't aware of the most important elements, that is psychology and risk management. You may have seen most of crowd directly jump towards trading setups. They are only interested to learn trading setups, that is short strategies or some tricks. Maybe either they don't have time, or they fails to understand that these tricks and strategies are only small part of whole system. These tricks are not a complete system, and these tricks will not work best if not acquired knowledge of whole system and practiced judiciously. Imagine how the car will be on single wheel if removed its 3 wheels. Somewhat like this your trading or investing will be if depend on only single element. So when we talk about whole system, it's need to club trading setups, analysis, risk management and psychology. Remember, this current video series about learning neo-wave is itself whole system covers trading setups, analysis, risk management except psychology, which is different subject. Friends, may you heard that analysis is tedious process, so might be you can think, why to learn tedious process of analysis? Let me answer this question that, why we need to learn the tedious process of analysis. Super brains. I can bait and say, you can drive swift and easily on your known roads than unknown roads. Why? Because presence of roadmap in your mind. Let us see these 2 scenarios. First scenario is drive on unknown roads. Second scenario is drive on known roads. Imagine a scene that you are at some new area. You don't know the road map, and in this situation you need to travel 20 kilometers. How driving will become difficult for you. Even you are excellent at driving skills, although driving will become difficult for you. Distance after distance, where you face crossroad, you need to stop your car and ask someone about the direction of your destination. In this case, your driving becomes slow, difficult, and boring. Why? Because of absence of road map in your mind, you don't have clarity about road direction. Due to lack of clarity, you are stopping at crossroads and asking someone. This hurdle reduces your speed and consumes your extra time, money, and energy. Now imagine the same scene, but only difference is that you are well aware about roads. Means now you are too clear about road and direction. How easy it becomes to drive now. For sure you will have very easy and swift drive experience. Why? Because here you merged road map with your driving skills. Merging road map with your driving skill for sure changed your boring experience into enjoying moments. Likewise, trading ability with small tricks or strategies is like only having driving skills. While merging your trading skill with analysis is changing entire perspective, provide you a roadmap of trading. This means analysis prevents you from losing money, energy, time, and boost your confidence. As per technological evolution, the world of trading or investing has gone through at least 5 major phases as technology has progressed. Phase 1, Personal Intuition Era. In oldest days, before hundreds of years ago, there were no reliable news outlets and no market data was available. Thus, trader had to rely on hearsay and rumors to make trading or investing decisions, and leaving the final decision much over personal intuition. Phase 2, Fundamental Analysis Era. Post telecommunications technology invention, and with more advances in equipments, it became possible to access the market data and business news. This time had emerged Fundamental Analysis Era. This phase would include analysis with macro and microeconomics data, like foreign policy, foreign investment, GDP, PE ratios, EPS, market cap, revenue growth, debt and dividend ratios, etc. Phase 3, Technical Analysis Era. With evolution in technology, next phase became popular in practice, and that is Technical Analysis Phase. This phase was required data of open, high, low, close and volume for each period. People started to plot these data on chart and study collectively Dow theory, blends techniques, moving averages, momentum indicators, lagging indicators, price patterns, trend lines, open interest, volume, various types of charts, etc. Phase 4, Elliott wave or psychological analysis or golden era. Merging of phases 2 and 3, new era came in existence, that is, the golden era of psychological analysis, which is what Elliott wave is all about. This type of analysis includes pattern recognition, Fibonacci price and time relationships, and the science of fractals. Phase 5, Neo-Wave Analysis Era. Glenn Neely introduced a new paradigm of self-definition to the field of market analysis and trading. Neo-Wave is not just a way of forecasting market action, but a new way of trading based on observation. Neo-Wave is the first logical, well-organized, self-defining, and self-confirmatory process of market analysis and trading. Before going forward, we must need to understand 2 different approaches of analysis and aspect of trading or investing purpose. First is proactive approach. That is forecasting approach, which give us idea of trade prior to price move, and we make our trade plan before entry setup triggers. Another is reactive approach that give us idea of action, what to do in present condition, according to price moves on our screen. Remember, our trading should be combination of both approaches, because forecasting clarity is good at beginning and at end of pattern, but not in middle of pattern. Now we will discuss some very basic questions like what price moves, what is supply and demand, and what is trend. Let us see one by one. First, what price moves? Answer is that price moves from one point to another point, either higher or lower, due to difference between supply and demand at particular time and particular price. This answer added here two terms, that is supply and demand, so the next question originates here is, what is supply and demand? And why difference created in between supply and demand? Supply is the quantity of commodities, products, and services that are available for sale at specific price and time. Demand is buyers' willingness and ability to buy the quantity of commodities, products, and services at various prices during a given period of time. The difference between supply and demand creates movement in price. That is, if demand is greater than supply, prices goes up, and if supply is greater than demand, price goes down. Great. But why this difference created between supply and demand? Answer is simple. That is, the difference between supply and demand is due to difference between price and value. Here price is a present rate or consideration at which trader or investor is ready to buy or sell, while value is the price in future days or months or years at which trader or investor will sell or buy. Thus, value is dealing with future time and its perception of people to sell or buy in future days. This difference makes one to sell and another to buy. Like this, millions and billions people are involved in this process of buying and selling, and due to this perception of future days value, there is always spread created between supply and demand. That's why prices always moves from one point to another point, either up or down. Friends, it is clear that price moves are a result of millions and billions people's future days perception of value. In simple words, price moves on the mood of mass psychology. This brings forward logic that mass psychology having mood with particular valuation, this causes great imbalance in demand and supply, and this imbalance causes price movement trends. Trends. Next question is, what is trend? The trend is perceived tendency of price move in particular direction over a particular time. There are three types of moves of stock market price behavior: uptrend, downtrend, and sideways. An uptrend is price move starting from particular extreme bottom towards upside, creating series of successive high and higher low. Downtrend is price move starting from particular extreme top towards downside and creating series of successive lower low and lower high. Sideways trend is also price move which start from particular bottom or top but not create series of successive high and higher low, or the series of successive lower low and lower high. Friends, now we understood that due to mood of mass psychology, price moves and create trend. Question is that, is this mood of mass psychology created by accident, or is there any force present in nature to make mood of mass psychology? Let us find the answer in next chapter, the law of nature. From last few slides, we reach a conclusion that Trading and investing have four core elements, that is trading psychology, risk management, analysis and trading setups. Analysis adds a trading map to your trading skills. New wave theory is latest era of analysis, trading and investing. Analysis having two approaches towards trading and investing, that is proactive and reactive. Proactive approach proves helpful at the beginning or at the end of pattern, because at beginning or end of pattern, high degree of forecasting clarity available. While in mid of pattern, there is lack of forecasting clarity, so in mid of pattern the reactive approach proves helpful. Price move is due to difference in between supply and demand, and this difference between supply and demand is result of difference in opinion of traders or investors about valuation at particular time. Price move involving mass psychology, and this price moves creates trends. There are three types trends: uptrend, downtrend and sideways.